The playbook has been for 2022 as far as the expectation goes. And this is very consensus. As rates go higher, the economy strengthens. You should expect to see financials like banks outperform relative to other sectors. This isn't some kind of guarantee. It's just consensus of what the industry is expecting in the next year. The expectation is still that the super mega cap, large cap stocks will continue to hold up and do okay. Industrials should do well as the economy continues to get stronger. We've been in a cyclically strong part of the economy, but that should continue. So industrials, energy, financials, materials, consumer discretionary should continue to do well. That's the expectation. What's expected to happen is more or less you should start to see the Dow Jones Industrial Average outperform the S&P 500 and NASDAQ, whereas in 2021, the S&P 500 outperformed by a lot the Dow and the NASDAQ. So we think that's going to switch. And the rest of the stocks out there, it's not particularly great forecast expectations for consumer staples. And most of tech will do okay, but there's a lid on what they can do because if rates go higher, that takes their future earnings expectations and lowers the value of those future earnings expectations, which means you're lowering the price of the stock. We're talking about stocks, not necessarily companies. So I just want you to be aware of how that is expected to work. So that's the playbook for 2022.